Hello everyone, Trader Vader welcomes you all to this new video. Let's see what the markets are doing today. So the Nifty opened gapped up a little bit today, is about 70 to 80 points, and clearly the sentiment is bullish. Yesterday after 3 p.m. it officially broke the budget day high. Here, as you can see, I have marked this line, green line, this particular green line. This was the budget day high, and as you all know that the budget day, on the budget day, the volatility was really high, and it formed a range. It's a very huge range from this area to this area, from around about 17,973 to 17,353. It was a huge area, and from the very first day of the budget, I mean on February 1st, it was kind of traveling in the same zone, and yesterday it has officially broke it here. Now Nifty is trading around 18,109. It's kind of in the zone. Let's break it down to the lower time frame. Before that, let me just show you the near main resistance. So this particular zone would be the near resistance, which is around 18,200 area, because if we go back and see this zone here, this is where it had taken the resistance earlier. So we are expecting some sort of resistance here. I'm not expecting that the price will just break that area and go higher. So that would be a resistance, and the main support would be this zone, which is 17,973-ish, or 17,980, somewhere around this area, 18,000 area. So that would be the primary, or I would say major support and resistances. Now for intraday trade, let's go ahead and break it down to I would say a 1 minute time frame, or let's go ahead and see the 15-minute time frame. A lot of trapping that is going on because the sideways market movement is trapping the traders. So if we talk about the 15-minute traders, people who are trading Nifty on a 15-minute chart, and I'm not overstretching it, guys, each block here is 20 points. So just think people who entered after this particular candle, the stop loss is really huge. So let's assume that they would have put their stop loss somewhere below 18,100, below the whole number here. People who entered here. But people who are entering after the break of high of this previous candle, which means who entered on this particular candle, obviously their stop losses are below this candle, and their stop losses are already taken out. So this, and even if you see on the 5-minute time frame, there was no way of escaping it. Yeah, of course I did not take any trade as of now, but if we look at this, just see people who would have entered the trade here at the break of the high of this particular candle, their stop losses would be below this, so they are intact as of now. But just think, people who have entered here, they saw this candle formation, they thought, okay, there's a halt candle, then they saw this candle formation, then this candle, which is also a bullish candle, this is also a bullish candle. So what would they would have done? People who would have entered after this candle, here, they will obviously place their stop loss here, 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 and here. They would have trailed their stop loss, and all their stop losses are taken right now. So the market has been recurring, or I would say incurring loss to these buyers until now. Let's see what the market is doing, because right now it's kind of sideways, and if the market comes down to this zone to fill this gap, this particular gap which it has created, if it falls slowly and gradually and comes and fills this gap, and somewhere here, if there is a break of trend line and retest and then break, then probably I'll enter somewhere when it breaks the trend line and then retest and then breaks again. So there is where I probably will buy, or if the market breaks the highs, let's say if it breaks this particular high, if it breaks it, and then if it comes down to retest this area, and then there is a trend line breakout, then that is where I'll love to enter. I'm not looking to enter short position because the sentiment is quite positive. If we see Then the markets have been bullish since yesterday, and whatever down move that we'll see from here, that will probably be just a retracement. So I would not like to trade the retracement. I would rather wait for some sort of retracement to complete, and then if there is a break on the upside, we can go ahead and buy, or we can go ahead and buy after this zone. Let's see, guys, how it turns out. So the market did exactly what we expected, and it came to this zone, this gap that we were talking about, and it kind of took support from this area. So let's break this down to the smaller time frame, how I plan my entry. So this is a 1 minute chart, and if we look at the price action here, it kind of, if you see, it came here, down here, and then this spike showed that there was demand coming in, and then it came up, it came down, trapped the sellers who thought that okay, this will be broken and it will go down, and then it came up again. And this is where we can draw a trend line that I have drawn here. Now, when we see this kind of consolidation around this resistance, that is when I thought, okay, now it may break out and go up with some sort of momentum, because it was, it has already sold off. If we look at the price action in the 5 minute time frame, then back to back negative candles can be seen, and without any sort of profit booking. So this is what I'm talking about. From here, a lot of buyers got trapped because they thought with every spiking, they thought that it's going to break out, and they bought and they got stuck. And then the market started to come down. So people who were selling probably were, still in profit, and till here they were in profit. Now this is also the low of today, as well as, there are sellers who sell right after the low is broken. So all those sellers got trapped here, which means the fresh buyers can come in, and people who have sold on the upper area, even they will go ahead and start booking profits, because then this will be their target for profit area. So that was the logic, guys. And in the 1 minute time frame, if we look at it, then when this particular candle, when I saw this particular candle, this these two candles, this is where I entered. So I'll show you the the call option chart. So here, as you can see, this trend line was broken here, and somewhere when this candle was forming, that is where I entered, somewhere around 78.38, and we exited around 100. So it was all in all a very good trade, about 1:3 risk to reward, and a pretty good trade.